Folks, all right, you came back for more. You're juiced up, you're ready, you got your notes ready, you got that game plan that we gave out a couple of days ago. So I know you guys made some money. And right now, what we have in front of us is the telling story of what we talked about. SPY is ready, QQQ is ready. I tell you, we have a really big week ahead of us. NVDA earnings is popping off. We got some more economic data. Donald Trump speaks tonight. And a lot of people are wondering, what's the next move? We've been caught into these moves for the past couple of days, past couple of weeks, right inside of this range. And we talked about this, guys. We talked about the range and what we could possibly do. But don't worry, I got a game plan for you. And if you're a part of my Discord, you know that we caught these moves early this morning. Now, I want to show you quickly inside of my Discord when we post our profits. Now, today, I'm done trading. I only have some swings, but we got a 13th day, 7%. Right? And these are some of the things that I caught yesterday on that bounce, right? Made a couple of dollars on that bounce. So you see, these moves can happen fast and you can get paid. All right. You got to stay down. You have to define your entry, your exit, and your risk before every trade, recognizing patterns and understanding human behavior. Okay. In QQQ. And this morning, we seen that we had on the intraday time frame, there was pretty much not a lot of pullback. You know, we fell yesterday. On Monday, the market got picked back up fairly well, and I spoke about this in my videos about the banks buying. The banks were actually buying, and so the dips are getting bought. And if you're not familiar with anything that I teach, one cool trick that I like to use is called the daily price movement range. That's right, the daily price movement range. Green means go, yellow means cautious, where we slow down, all right, and red is stop. Now, if we ever get above, all right, our top, the resistance of our daily price movement range, then we simply move the green line. All right, we move this up towards the red line, or we change the red to green to represent a place of demand. All right, simple as that. Move up yellow for your midway and move up your red for the top of that pendulum swing. Now, that's what you have to do when you're trading in thirds. Now, we talk about this, the slingshot reversal, and you guys have been waiting, I'm pretty sure, for the past couple of weeks, past couple of days, just for these gaps to get filled here. So let's go back to the hour time frame. Right now, we are at 687.18, just below the gamma squeeze, where the market makers have to hedge. And bear with me as I navigate the screen. Smash that like button if you've been getting some value so far and you made some money from these past couple of videos. I tell you what, they're pretty accurate. Now, I'm not going to say that we have a crystal ball, but the way that we trade human behavior, guys, I'm telling you, I've been doing this for a very long time. Now, as you can see in front of your screen, okay, we have this megaphone, right, where price goes back and forth, and you have these pendulum swings. Okay, we talked about this. It never changes, and we're still actually playing that same pattern, right? So why switch it up? We got to go with the game plan that we already had, all right? And price likes to go back and forth, okay? Swinging back and forth. This was the swing that we got yesterday, all right? We talked about that on our previous video when we were here, and we got that pullback, but it got bought back up right in our daily price movement range. And now we're trying to rotate higher. We are above the midway point, and we are above the 21. We have to get past the 21 and stay above it, to close above it today, right? Within the next hour. It's 3 o'clock. It is the power hour of the day, and we have only an hour left inside of the market. So you want to see price reclaim the strength and hold above. Now remember, NVIDIA has earnings. NVIDIA has earnings, and the QQQs, they look the same, a little bit weaker than SPY, but the Qs are relatively the same. You have the same megaphone pattern, all right? Same megaphone pattern, okay? You have that variation, and you also have the one that's in between, okay? And price has been swinging back and forth within these pendulum swings within a range of emotion. We already know this. We talked about this, guys. A range of emotion. All right. This is your point of control. Okay. In a range of emotion, price swings back and forth. Where is the best risk to reward for you? Where do you want to go out calls at? I tell you, I've been doing this for years, and what I've learned is that there are always going to be somebody that's trading in the market, whether they're in the United States or the UK or Canada. Somebody's going to be trapped. Somebody's going to get it wrong, and that's what I specialize in: high probability setups, learning how to see liquidity and spot liquidity. Where is the cash at? Where does price shoot to really fast, right? Why does these big green candles happen? It happens because it's a trading error. People are trapped. These are the kind of candles that I want, and we caught that momentum this morning. based off of our trading plan, okay? We talked about this, and now we're trying to make our way to the top. Now, again, as I stated before, we have to get past 689, 690. This is a massive wall, as you can see. We did get above it just a little bit past couple of days, but pretty much 690 has been that wall, and we got to get past it. And I tell you, if we can get past this wall, guys, if we can get past this wall, there's going to be a lot of people trying to cover the shorts, and we're going to squeeze towards 692. Now, 692 being the gap fill level we spoke about. If we can hold their demand and take out those bears, there's a chance that we could squeeze, all right, just above some of these ranges here on price action, right above here. 698, there's a possible chance. Remember this video, okay? But if we cannot reclaim, look for 685 to hold. All right, 685, 684.99, our midway point, right? Our midway point. This is what you want to wait to see hold. All right, we have another hour in the market. If this breaches at any day, there's a gap here, right? I see this gap getting filled. But some traders, they chase this move and assume that we have to fill right away. We're already making higher lows. You see a parallel channel here. That's elementary trading style, right? We know that. There's trends, trend up and trend down. We're making higher highs. We're making higher lows. We're making higher lows as of now. There's a gap here, but we're above the 21, and we're showing some strength. Right now, there's strength inside of the sector. And so you don't want to front run it, all right? If you're not already in, you pretty much have been scalping all day. But we already been in, and we're holding, all right? Because we're swing trading, and we're managing our trades while we're in it. Now, if price wants to go back down here and fall below the 21, I have a conditional order that tells the market to kick me out. But that's the risk I'm willing to take in order to see that push towards the upside, all right? Now, just in case you guys forgot, remember, there is a gap up here that has to be filled. Now, let's say we get up here, price breaks out, breakout pullback, we get up here, all right? This is the area right here where people chase, okay? Now, we had a lot of bear momentum before, and we can whack this thing right back down. I don't want to just do any type of pattern. There's a special pattern up here, guys. Check it out. This is when you want to grab your notes and pay attention, all right? It's a technical pattern, all right? Want to let the bulls try once, all right? Let them try twice, get it just above that previous high, right? Okay, to trap them in, to get them juiced up to think that we're going to go in. And what we want to do is we want to wait for that first wick. Okay, price comes back down. And comes back up. Right here is where you want to trap them at. Okay, if we can get them to get trapped here and commit for that technical pattern, all right, usually this is what happens. We get that flush back down, all right. And if you haven't noticed just yet, this is your head and shoulders. Okay, head and shoulders is a bearish pattern, all right. They show up from time to time. Does it always happen? No, but if it does, it's a high probability setup. And right now we haven't got there, but this is a future forward thinking model. These are trading setups, okay? And you want to try to catch these patterns when they happen and understand why there's traders chasing the top. They didn't catch these moves with us down here, and they're chasing. But we don't want to pick tops and bottoms. We want to try patterns and let them come back down and retest these lows, all right? This is where your money is whenever you trap in rookies. Now notice I didn't mention the strat. I didn't mention Fibonacci. I didn't mention any moving averages. This is straight price action structure, market structure and price action, order flow, all right, with a little bit of intuitive nature from me because I've been doing it so long. All right, now we're going to hop over to the Qs. All right, as you can see here, the Qs are looking similar to the SPY, all right? Still struggling here, so the same thing applies, all right? I want you to understand that. I don't want to waste your time. IWM, let's check out the small cap, all right? We are on an hour time frame. A lot of chop, guys, a lot of chop. IWM has a lot of chop, but as you guys can see, we are bullish within a range, right? This entire thing is a range. Okay, the banks are buying. We are on a range here. Okay, are we finding some demand, some base, right? Are we finding some base? Are we above the 21? Yes, we are. Let's try the small caps, MDY. Let's see what that's looking like. Okay, this is a little bit more bullish than the other cohorts. Okay, we have these similar patterns. Bullish into a range, find a base. Bullish into a range, find a base above the 21. Seems like we're stepping up. All the banks buying, all the banks stepping in, guys. I think it's telling us the situation. Now, I'm going to double back to the SPY, right? Now we talked about, let's take off these markings. Okay. Take off these markings. All right, we are at 687.06. The gamma is 687.24. We must reclaim the gamma, right? This is the fuel for the market, all right? GAMMA, the gamma. We must reclaim the gamma in order for us to see strength towards the upside. This is what we need, all right? 687.24, all right? That's the number to watch. That number, it could change tomorrow, but right now, this is the fuel for price action. So we need this to be above for us to continue towards the upside. Otherwise, that we have here, we have resistance, and we will revisit these lows, okay? Knocking out some of these stops, filling in some of these gaps. Could we be possibly doing it right now? I think that's a possibility. Yes, it's a possibility, all right? Now, if we do reclaim some of these lows, I do want to try to buy this dip here if we can get that dip. But if we just stall here at the 21, right? Which will be something like this, okay? Price goes up. We come down. We form a base here, just below, all right? Okay, now this gap here does not have to be filled. This gap doesn't have to be filled, okay? But if it does, you wanna watch for the reversal, okay? People are gonna chase. They're gonna say, hey, if the gap gets filled, we are definitely gonna go down. Now, granted, the money is here, right? Price falls, okay? Let's grab our marker. Price falls, fills that gap, creating a slightly higher low, right? And the dip get bought again. Come up here to retrace the gap, the top of the gap, come back, make another higher low, right? And then we burst towards the upside. All right, this is a scenario. These happen all the time. It happened here. Look, guys, look right here. I'm not making up anything. I'm just showing you guys patterns. And I've been doing it so long that it just comes really natural to me. Now, I can see price coming back down, right? Remember that Donald Trump speak. It is power hour. This is a possibility. Now, candlesticks can be false advertisement. I like to turn on the Heikin-Ashi candles. All right? And the Heikin-Ashi candles tell you a different story. 687 is holding. We are above the 21. Right, we need to hold above the 21 and hold above 687 within the next 30 minutes. All right, at the time of this recording, it's 307. If we cannot hold these numbers, we will fall back down and retest some of these lows. All right, that is a scenario, and of course, we do have a lot of momentum towards the downside. And so, just like we have our pendulum swing, we talked about this. Okay, we have our pendulum swing. All right, put up our megaphone. Okay, and so there's a chance that we could swing back down towards the downside. Okay, there's a chance for that. How do you time it? How do you time that? You're either getting in early or you're chasing, right? Waiting for the perfect moment to strike. Okay, so right here. Okay, I want you guys to see this. Okay, now right below here we'll be breaking these structures. We're taking out these orders here. If we fail to rotate higher, or we get up here and people chase, and we get that pattern I told you, there's a big chance that we could have a big flush back down to these lows. Okay, now if we are bearish, if we are bullish, I expect us to give back some of the momentum, only because it's the end of the month coming up. Friday is going to be here. The end of the month for February is going to be here, and we're going to have our March trading signal. And so there's a possibility that people could be taking some profit or waiting for some data to be released and waiting for that candle close in order to see if the broader market can find some upside. Now, I will show you that economic data that's coming out today. Remember that Trump is speaking tonight. And at 3:20, within 10 more minutes, we will have Fed member Barkin is speaking. All right, so he's going to be speaking, and sometimes when these guys speak, it creates volatility. Now, you're not going to be able to see that reaction because we're making this video and we're going to wrap it up, but you will be able to check that timestamp and check today, or depending on when you watch this video, you can go back and check SPY, check 3:20 p.m. today, the 24th, and see what I'm saying about how this data affects price. All right, and not just the SPY. Now, tomorrow, Thursday and Friday, what do we have? Economic data. If you're new here, let me tell you what we do here. We focus on market structure and price action. So this is live commentary. You get futuristic models, you get commentary about what's happening and why things work. And this is one of those things. Forex Factory, this website gives you data for inflation, interest rates, GDP, right? Gross domestic product. What is Donald Trump doing? What are the Feds doing? What is the commentary? This creates sentiment and volatility in the market volume. It moves back and forth a lot depending on what's being said in a self-fulfilling prophecy from traders. They click those buttons and they put in their buy orders. What are you watching for your signal? This gives you that. At certain times of the day, this data comes out. And tomorrow around 9:30, 10:30, around market open, we have Barkin speaking again. And at 10:30, we have crude oil inventories. Now, if you notice, we have yellow folders, orange folders, and red folders. The red folders are like red hot, a lot of volatility. We get big market moves, indoor it's just really choppy, right? And you just can't get a footing on price action. The orange ones are a little bit less, right? Less volatility. And the yellow ones are, of course, the lightest. All right, so you want to understand that difference. Coming Thursday, we have a red folder. All right, a red folder is unemployment claims at 8:30, and we also have 10 o'clock and 10:30. We have natural gas storage and another Fed member speaking, the same guy. Fed Bowman is going to be speaking, and of course, late we have this orange folder. So Friday, to wrap things up, GDP, which we just spoke about, and the core PPI. Now this is going to move the market. It's going to be inflation talk. It's going to move the market. And so guys, be careful, be wary. All right, if you're not familiar with this type of trade or you're scared, stay out of the kitchen. Wait for price action to show itself that morning. Wait for it to react, and then you can create a trading plan. All right, now here's SPY. As you guys can see, we are pulling back a little bit. So this is what I'm expecting. Remember, we have that data coming out in about 10 minutes, so you do not want to miss it. All right. We have the fear and greed index sitting at fear. There's no telling what could happen based on this information, but we are in fear. And sometimes this means it's a contrarian view. People are rushing and panicking, and people are actually buying this fear. And there's another way to actually see that. We can check out the put-call ratio. All right, here is the put-call ratio. This is actually going up. Now, anything above 0.70 is going to be a little bit more bearish. And so there are people buying puts right now. And it's obvious because the SPY is falling. But if we get that fall here on the PCE to fill some of these gaps, we will rally into the close. All right, and so I am a bull, period, overall, but I do not trade bias. I like to see the truth and what's really happening, and this could mean that we could get some more pullback. Just to reject here, these are streams. When too many people buy puts, we fall and we rally. This is what happened, guys. Look at the date right here. This is the 24th. That's today. All right, 23rd was yesterday. We were already below the 21 in the put call ratio. That would mean it was more calls being bought. Somebody not really noticing that, but more calls were being bought. And then this morning, that's why we got that rally. Right now, we have it above the 21. You know, NVDA earnings is coming up on Wednesday, so think about the sentiment. Some traders might be stepping away, waiting for NVIDIA earnings before they put their money in the market, and it could be hedging. Hedging meaning buying puts along with their calls. All right, so you want to see this go towards the downside from here, or rejecting from these highs, or any of these extremes. If they start to get above here, SPY will start to tank. Right around here, I want to look to buy calls. Period. I want to buy that extreme dip. Right, I want to buy that. Now I can't assume that would happen. Right, because this could drop from around this area and we could rally into the close. You just have to see. This is what you guys want to wait for. I wanted to come and give you some commentary for you guys to have an update on the market, and a lot of things really haven't changed. It's the same swings back and forth, and I want to overcrowd you with information, but I always want to give you some value so you can see these technical patterns. I'm right here with you guys, and if you want a community to trade with live, we trade live specific days during the week. If you're interested, you have to join the community, right? Get some of this value, earn while you learn, and you also get free access to my trading ebook. All right, you get free access to my ebook. I want to show you that book actually. Okay, this is the trading book that I wrote for the community. It's the Power of Patience, PAY. Mastering Emotions in Trading While Turning Discipline into Income. All right, this is my publishing group. This is a book that I wrote for the community. That link is down below. Gain an edge. Study chapter 6, 7, and chapter 8 tonight if you can. And I guarantee you next month, March, your P&L will be up a little bit more. Trust me on that. You want to join a group. And just to show you the accuracy of what I say, as I've been talking to you guys, we've been selling off in the SPY. I told you that we had to get past these markings, and we are rejecting now and coming back towards here while that PCE is rising, okay? And also the bond market. What is the bond market doing? The bond market is also falling. Let's check the TOT, and we're going to wrap things up here. Thank you guys for watching. I really appreciate your time. As you can see, there's value here. All right, the bond market is trying to go out. We have to see what happens. 5 more minutes. 5 more minutes, and we will tell whether people are going to chase here. Remember our scenarios. Hold me accountable. All right, guys, I'm going to wrap it up. Thank you guys for watching. I will see you in the next video. Don't forget that OPEX Friday is going to be coming up. The video will be out, and I will have the March trading signal so you guys can have a 30-day game plan. That's right, a 30-day game plan. All right, so thanks for watching. Make sure to like and subscribe and share this video out. This is an update for the market. You don't want to miss it. I've been pretty accurate so far. Remember, we caught this move when everybody was bearish buying puts. We caught this move, and so you want to catch the next signal. We don't trade every move on the market. We specify in creating patterns by seeing our edge play out and recognize patterns. All right, guys. So it's been a lovely one. Until the next time, guys. Peace.